Hello everyone, and welcome back to the channel. It's great to have you here. Today, we're diving deep into a topic that's on everyone's mind, the price of gold. Where is it headed? What can we expect in the coming days? I've been getting a ton of questions about this, so let's break it down together. Gold has been on an incredible journey lately, and understanding its next move is crucial for anyone watching the markets. We'll be looking at some potential numbers, exploring the factors that could push the price up or down, and trying to make sense of the current market sentiment. It's a complex picture, but stick with me, and we'll navigate it step by step. Ready? Let's get started. So, let us address the big question right away. What is my take on the price of gold for tomorrow? If you were to ask me for a single, average number to anchor our expectations, I would put it in the neighborhood of 4,150 United States dollars per ounce. Now, of course, the market is never that simple. I see a likely trading range, or a comfort zone if you will, where the price could settle by the end of the day. Let's talk about the what-ifs. What if we see a significant surge in momentum? If a wave of positive news or strong buying pressure hits the market, we could see gold make a serious upward push. In a scenario like that, I wouldn't be surprised to see the price challenge the 4,300 United States dollars mark. This would be a very bullish signal, indicating strong confidence in the precious metal. On the flip side, what if the market decides to take a breather? Corrections are a natural and healthy part of any market cycle. If we see some profit-taking or a shift in sentiment, the price could pull back. In that case, I'm looking at a support zone between 3,950 United States dollars and 4,000 United States dollars. This is an area where buyers might step back in, seeing the lower price at a good entry point. So, we have our upside target and our downside support level. Now, you might be wondering, why these numbers? Where are they coming from? That's a great question. These figures aren't just pulled out of thin air. They're based on a combination of technical analysis, market sentiment, and macroeconomic factors. For example, that 4,000 United States dollars level is a significant psychological benchmark. Prices often find support or resistance at these big, round numbers because they stick in people's minds. Traders place orders around them, creating a self-fulfilling prophecy of sorts. If the price drops to 4,000 United States dollars, many might see it as a bargain, and their buying activity could stop the price from falling further. Similarly, the 4,200 United States dollars and 4,300 United States dollars levels might correspond to recent highs or other technical resistance points on the chart, where sellers might be more inclined to take profits. It's a fascinating dance of psychology and data. Let's dig a little deeper into the forces that could actually move the price to these levels. What could trigger a surge to 4,300 United States dollars? One major catalyst could be new geopolitical tensions flaring up somewhere in the world. Gold is the ultimate safe haven asset, and during times of uncertainty, investors flock to it for security, driving the price up. Another factor could be a surprisingly weak economic report. For instance, a lower than expected jobs number or a dip in manufacturing output. This could signal a slowing economy, prompting central banks to consider lowering interest rates, which is typically very bullish for gold because it makes non-yielding assets like gold more attractive. A sudden drop in the US dollar's value would also be a powerful tailwind, as gold is priced in dollars and becomes cheaper for foreign buyers. Conversely, what could cause that correction down to the 3,950 United States dollars, 4,000 United States dollars range? The most likely trigger would be a stronger than expected economic report. If we see robust inflation data, for example, it might lead the Federal Reserve to maintain a more hawkish stance, suggesting interest rates will stay higher for longer. Higher interest rates increase the opportunity cost of holding gold, which doesn't pay any interest, making it less appealing to investors. We could also see a simple technical pullback after a strong rally. Markets don't move in a straight line, and after a period of rapid gains, it's common for traders to cash in their profits, causing a temporary dip. A significant rally in the stock market could also draw money away from gold, as investors chase higher returns in equities. So, how should you approach this? The key here is not to panic or make rash decisions based on one day's prediction. These numbers are guideposts, not guarantees. The most important thing is to have a plan. Understand your own financial goals and your tolerance for risk. Are you a long-term investor who believes in gold's value over years and decades? Or are you a short-term trader looking to capitalize on daily fluctuations? Your strategy should reflect your personal situation. For long-term holders, these daily movements might just be noise. For traders, these levels we've discussed, the 4,300 United States dollars resistance and the 4,000 United States dollars support, are key areas to watch. A break above or below these points could signal the start of a new, more significant trend. It's also crucial to remember that the gold market is global and incredibly complex. It's influenced by everything from central bank buying in China to jewelry demand in India to investment flows in New York and London. We've talked about some of the big drivers, like interest rates and geopolitical risk, but there are countless other variables at play. That's why it's so important to stay informed and look at the bigger picture. Don't get caught up in the minute-to-minute price ticks. Instead, try to understand the underlying story the market is telling. Is the narrative one of economic strength and stability, or is it one of uncertainty and a search for safety? Answering that question will give you a much better sense of gold's likely direction over the medium to long term. Let's summarize our outlook. My average expectation for tomorrow around 4,150 United States dollars, with a probable closing range between 4,100 United States dollars and 4,200 United States dollars. We're keeping a close eye on a potential bullish breakout toward 4,300 United States dollars if positive catalysts emerge. We're also prepared for a possible healthy correction down to the 3,950 United States dollars to 4,000 United States dollars support zone, especially if we get strong economic data. Remember, this analysis is for informational and educational purposes. It's about providing you with a framework for thinking about the market. Always do your own research and consider consulting with a qualified financial advisor before making any investment decisions. The financial markets involve risk, and it's essential to be prepared and informed. I hope this breakdown has been helpful in giving you some clarity on the potential moves for gold. Thank you so much for joining me today for this analysis. I really appreciate you spending your time here. If you found this video helpful and want to stay updated on the latest market insights, please do me a huge favor and hit that like button. And if you haven't already, make sure you subscribe to the channel and turn on notifications so you don't miss any future updates. I love hearing from you, so please drop your thoughts, questions, or your own gold price predictions in the comments below. Let's get a conversation going. Thanks again for watching, stay safe, and I'll see you in the next video.